Textiles player Arvind Limited is expected to announce its quarterly results today, the first time it does so as a pure-play textiles and garmenting company since the demerger of its branded retail business. Nupur Jain Kunya, our latest entrant to the research team, joins us to give us all those details. Nupur.
Well, thank you for that. Arvind Limited will be reporting their financial performance for the first time as a textile and a garment maker. Not many prominent brokerages have put out the estimate for the demerged entity, but Edelweiss estimate textile business revenue growing by 6% and garments by 15%. But it anticipates a decline of 5% for the denim business. On a composite basis, Arvind's revenue are seen flat at 2,700 crores and margins at 10.9% versus 9.2% on a year-on-year basis. The management had guided for a 10 to 12% growth in the business, but the street is factoring in a more muted performance and the stock has lost almost 22% since its listing post-demerger.
Thank you, Nupur, for that. We trust you to get us more on that, but we have to shift focus to the commodity space now because crude has picked up some pace and was hovering above the $62 per barrel mark. So now let's go across to our commodities editor Manisha Gupta to get us more insight. Manisha, good morning. Over to you.
Thank you for that. Well, the crude oil prices have been quite choppy. We've seen the U.S. inventories increase. The U.S. production also is at record highs at 11.9 million barrels per day. But what is supporting the crude oil prices is the OPEC supply cuts and the crisis in Venezuela. Also, worth looking would be the U.S. dollar movement, where you have seen the dollar index at a 2-week highs. That seems to be putting some pressure across commodities as well. So not just crude oil prices, the metals have been quite volatile. Also, some profit taking is what we are seeing in the LME prices right now. But even with that, the copper prices are trading at a 2-month highs. You have zinc trading at a 7-month highs. And the lead prices also have been boosted on environmental crackdown in China smelters. The best gains, of course, have come in for the iron ore and the nickel prices, where we have seen force majeure by Brazil's whale on some iron ore contracts. So you have the nickel prices holding at multi-month highs. The iron ore prices are up nearly 18% in this year already. And also when it comes to the decline in inventories on LME and Shanghai warehouses, that is yet another reason that seems to be supporting the metal prices. So more gainers than losers, I would say, when you look at the metal pack today in Asia.
All right, Manisha, thanks a lot for that. With that, we shift focus back to the equity space, the derivatives markets. Remember, yesterday the Nifty reclaimed the 11,000 mark, sitting at a 4-month high. But that did so with a lot of institutional flows and index futures buying by the FI. So if you take a look at the live intraday indicator that we have, which is the Nifty futures premium, that one spiked by about 10 points to around 27.8, and this compares with about 17.35. So that's telling you there was some purchase, and data confirmed that. Not just in futures, cash market. If you take a look at the FIIs and the DIIs, both of them put together added close to around 1,200 crores in the markets. The FIIs bought about 700 crores of that. FIIs bought big in index futures, and now their exposure in index futures becomes net long. The FIs yesterday bought about 3,000 crores, 2,818 crores to be precise, in index futures, where they added nearly 31 long contracts per short contract. So 34,000 long contracts in index futures added by the FIIs, which takes their net long exposure from 46% day before yesterday to 52%. So the FIIs are now net long in index futures. Not just that, we saw a fair amount of put writing as well. 11,000 put. Once we crossed that mark, saw about 14 lakh shares being added in open interest out there. The premium fell by about 34%, as was the case for the 10,900 put as well and the 10,800 put. However, what was interesting was the 11,000 call, which still has the maximum open interest, did not see a lot of short covering. So let's see where that goes by, because sustenance of the Nifty above the 11,000 call will be more important given crude RBI policy. Nifty put call ratio at 1.8 is slightly higher, so keep an eye out on that. And it's also the Nifty Bank weekly options expiry.